We will get started here in one moment. We just want to let everybody load into the Zoom app and join the meeting and before we get started. So we will start here momentarily. Good morning, everybody. Thank you for joining the ACA Small Business Bootcamp and Resource Collective for this Thursday, February 4th. We're excited to be here today, and we want to start, as we always do, by thanking all of our community partners. We could not do these sessions without them. We have a number of community partners that help out. They provide their expertise, their time, their effort, their energy, and so we thank them very much. The Small Business Bootcamp and Resource Collective is designed to help small businesses work through the COVID crisis. As I mentioned, it is supported by, as a statewide initiative, supported by our community partners. We have approximately 100 or more community partners that have helped throughout the last 11 months of doing these boot camps, or 10 months. And we can't stress enough the importance that they bring with their expertise and their experience. Besides the boot camp, it is also a resource collective. And we have a great website set up with all the information. You went to this website to register for today's session, but also on this website, you'll have the link to the resource collective and also to all the previous bootcamp sessions that we've done. We record all the sessions and we post them on this page so you can go back and review them, review the materials that were part of it, and or watch it for the first time if you couldn't make it for scheduling reasons. You couldn't make the boot camp, that you can go back and watch it and get that information. The Resource Collective is a great compilation of tools and guides and resources provided by our community partners. These tools are designed to help small businesses work through the crisis, return stronger than ever. And there's some tools, this is a sample listing of some of the guides and resources and tools that are available on there. But our community partners have provided lots of information that you can download and link to on that page. So we highly encourage everybody to take a look at it. As we talk about our community partners, we want to do some updates with from the SBA and other organizations. As of January 31st, the SBA is reported for the second round of PPP lending, so the ones started in 2021, that Arizona had done 10,279 loans for over $873 million. So it's a great infusion of funds into Arizona in 2021 for those small businesses. If you're still looking to get a PPP loan, this is the lender list that the SBA provides, and we will link this in the chat. All these links that are on here, you can find them afterwards in our presentation, but we will link them to the chat as well. So if you hit the chat, these links will get posted here shortly. Additionally, there's the Emerge AZ FAST grant, which is a grant program for tech businesses and startups that throughout the state. So we've got the link for the information on that grant. Additionally, I want to share two new updates on the SBA's website. The SBA just created a page called the SBA Cross Program Eligibility, and it's a little chart that helps to understand how the PPP, the Shuttered Venue Operators Grant, the EIDL, how those different programs kind of cross over and how it works for you. And then additionally, the Shuttered Venue Operators Grant, if you have a venue that's been shut down, a theater, music venue, etc., museum, the SBA just updated information. They've got a great page now set up with lots of information on this grant. The application's still not up yet, but the information on eligibility and so forth is. And so if you have one or you know somebody that has a venue, please get this information to them. Also, I just want a quick mention of our COVID-19 Arizona Business Resources page. This website includes links to all the financial guidance, to business guidance, to the boot camp, to all the different resources available for small businesses and all Arizona businesses during the COVID-19 pandemic. Additionally, the AC has some great programs to help support small businesses. We have our small business services that includes working with the SBA, working with the SBDCs, helping guide people to local banking contacts for SBA loans and PPP loans, and et cetera. Additionally, our workforce division has programs to help employers that are looking to hire or upskill their employees. We have got a number of great programs there. And then our Arizona MEP, Manufacturing Extension Partnership, is a great program to help support manufacturers throughout the state. Additionally, for all those looking to start a small business full-time or start a side gig business, we have our small business checklist, and it is an online interactive tool to help understand the licensing and registration compliance needs for small business at the local, state, and federal level. It covers every incorporated city. It covers different professions and industries. So it is a great tool as you're looking to start a business. And then finally, we want to just remind everybody about the state's COVID-19 information and resource page, arizonatogether.org. A lot of great information on this site related to COVID-19. So looking to next week's sessions, we've got a great session today, but just to mention for next week's sessions, we have using data-driven strategies to run your business on Tuesday with Chris Spear from Traction Point. And then on Thursday, we have 10 legal mistakes that can hurt your business growth with Brian Burt from the law office of Snell and Wilmer. So we're excited about both of those sessions as well. But since we're in this week, we're going to go ahead and turn the time over to Amber Kellogg and CJ Johnson. Amber and CJ work with the Maricopa Small Business Development Center, and they're both business funding analysts that are excellent at what they do. So I'm going to go ahead and stop sharing my screen and turn the time over to them. Thank you. Amber and CJ, it's all yours.
Thank you.
All right.
Thank you, CJ. How exciting. Thank you guys so much for joining us this morning. And we wanted to just kind of go over, the cash flow management, knowing your cash position during COVID-19. That's what we're going over today. In order to strengthen your company's financial position, business owners should know the importance of cash flow, which is why we're doing this today, and how it impacts your business. In this presentation, we'll explain the impact of cash flow and how to complete a template, give you an overview, and then examples too. So helping you find issues and opportunities in that as well. And here's our pictures again. Robert introduced us. My name is Amber Kellogg. We probably should give you a quick introduction. I am a business funding analyst with the Maricopa Center. We are a resource for small business financial literacy. We help guide, educate, and support business owners through through Maricopa Community Colleges Development Center is part of a powerful statewide network. Bear with me just a second. Through the SBDC, we are help guide, educate, and support business owners to be financial leaders of their business. Before working actually for the SBDC, I worked in the lending world with JPMorgan Chase for about 10 years. So I kind of know the lending world a little bit. Prior to that, I worked managing businesses with a Limited Brands, alternating between two divisions, which you guys might know. Limited Brands is Victoria's Secret and Bath & Body Works for about 14 years. Then finally called Arizona home about 13 and a half years ago. And I'm excited to be a part of the discussion today. CJ, you want to tell us a little bit about yourself?
Certainly. Well, I've been with the SBDC going on 2 years now. I can't believe it's really flying by. Prior to this, I was in the commercial lending world. I've done lots of different commercial loans, including SBAs, their 7As, and even the 504s. So coming into the SBDC was really being on the flip side, because as a lender, I use the SBDC all the time to help get my clients into a stronger financial position, and then they'd come back over and then we do the loans. So now I'm on the flip side and I get to do what I used to have others do for me. So I'm really enjoying my time here.
Well, before we begin too, we should probably tell you, I was sharing a minute. Maricopa Community Colleges is a development center, part of a powerful statewide network. America's SBDC Arizona, which is accredited by the nationwide America's SBDC. We are funded in part of a cooperative agreement with the Small Business Administration and hosted by Maricopa Community Colleges. And we also share productive partnerships with the City of Peoria and our friends over here at Arizona Commerce Authority, who invited us to come visit with you guys today. Our mission is to guide, educate, and support you as business owners, whether you're a pre-venture client who just have an idea, businesses that are just starting out, or even in long-standing existing businesses. We have a no-fee counseling service that focuses on helping you grow, launch, and sustain your small business. We have a team of business analysts. There's about 17 of us now. We're growing. And we have experience in all of these areas that you see listed here. If you don't see your industry listed here, it's okay. We have a ton of resources that we can help you with your business. The Maricopa SBDC offers research and training as well as our counseling. And we have a ton of tools and resources to help you with your business development and planning. We do have great relationship also, CJ was saying, with lenders. And we have an understanding of what lenders are looking for. So that helps our business owners, because there is a long list of things that you need when you're doing anything with lenders. And that's kind of how we help our clients. It's part of how we help our clients. We put together that lending list of 30 things that they want you to use when you're doing lending. And we try to make it your package a little bit more appealing to lenders, so it helps the lending process a little bit less stressful for you.
So our discussion today is to help businesses by supporting your efforts in understanding and utilizing your cash flow position. These efforts should have a positive impact on your business. And please keep in mind that this information that we're sharing is in no way legal or investment advice. We are not attorneys, nor are we CPAs. No, we're not. Though sometimes we try to pretend, but no, we're not. Today we're going to go through cash flow, how to manage it and become a financial leader of your business. Cash flow problems are one of the leading causes for a small business's failure. And these problems can stem from any one of the following. It could be cost management and those things, inventory, maybe debt utilization, or just not knowing where your cash position are and having not enough reserves. And these are some of the no-cost resources that are available to our clients. We have Growth Wheel, Live Plan, Profit Sense, the SBDC Net, and then IBIS World. And some of these you'll see pop in and throughout our presentation during those times. Today we'll be covering 4 sections in our discussion. It will be the cash flow management, the definition and its steps, and then also the SBDC's guidance. And by the end of our session, you'll have a better understanding of the importance of cash flow management and how to become that financial leader of your business. When it comes to a business financials, the business owner typically falls into one of these 3 mindsets. The first one is proactive owner. They consistently know the status of their cash position. They have good cash reserve in the bank for any unforeseen events. The second type is reactive. They spend their time looking about and putting their time into putting out their fires. Maybe they only look at portions of the business, such as focusing on sales, but ignoring operations expenses as it eats away at their cash reserves. And they don't realize it until it's too late. The third owner is kind of inactive. Their mindset might be one of detachment because they have people to do the books. They just sign the checks. They don't see any problems unless their bookkeeper brings it to their attention, and that's usually after the fact. In order to be a proactive business owner, the first step is to know what cash flow management is and what it should be in your toolkit. So right now we wanted to take a quick poll, and Lisa's going to help us do this. Lisa, if if you just take a couple minutes, not minutes, excuse me, we'll leave it up for about 25, 30 seconds, and then we'll discuss the results of this. Have any of you used a cash flow template before in your business? Just give it a couple more moments. How's that going, Lisa?
Good. Can you see the results?
I do not see the results yet.
Okay, let me end the polling and see here if you can see the results here. There you go. Can you see that?
Wow. Okay. Well, then we got our work cut out. This is great. That's good. All right. All right, Amber.
Perfect. Thanks for doing that poll for us, Lisa. It shows that we have a lot of work to do. And I know there's probably going to be a lot of questions throughout our presentation. If you could put your Q&A or the questions in the Q&A, and at the end, we'll try to get to as many questions as we can. And if we don't get to them, we will have our contact information that you could reach out to CJ and I to request for counseling, and we can help answer those questions. As a business owner, it's important to proactively know your profitability, your cash flows, and how to manage it consistently. That's kind of the key, is being consistent in it. Companies with higher cash flows tend to have more reliable businesses and fewer problems when it comes to funding their business. So if they kind of know where they're at in their funding, then it's a little bit easier for them to be able to fund their business needs. Cash flows do vary from industry to industry. We realize that, and there are different rules for every industry as well. This is just a quick high level. So I know that there's going to be a lot of questions, particularly about maybe just your business. But this is really an in general high level quick overview that'll give you a very general understanding of the health of your business, looking at general cash flows, looking at the trends of the cash flows from operations that we see in yellow, investing, and financing, the correlation of the cash of your earnings to your net income or earnings. The following are the components of cash flow. So yellow, we see that they're operating. This refers to day-to-day overhead expenses like payroll, utilities, office supplies, those kind of things. So cash expenses that are related to net income. In purple, there is investing activities, refers to long-term assets that we may consider for acquisition or disposal, cash activities related to non-current assets. And in pink, there is financing. This means that the activities that incur business debt, whether it's long-term or short-term, which impacts the owner's equity. The cash flow management process needs to be completed on a consistent basis. That's why I said before, consistency is key. It's not just during times like now in a pandemic or a recession. We need to make sure that we're consistent in understanding where our cash flow is. As a small business owner, we know you're very busy. We get it. And we may not enjoy this part of tracking your numbers because it's the financial side and it's numbers, right? So knowing your cash position, though, is very critical. It's a critical point that you need to manage your business. And knowing it should be a part of your toolkit. So the things that we give you today should be a part of your toolkit. And it helps you check the health of your business, as we mentioned a minute ago. And today we're going to help you add this to your financial toolkit and help you be more financial leader of your business. By the end of the cash flow management session, you'll understand the importance of the following. We have a list here: understanding and knowing your cash position, creating your financial toolkit, troubleshooting to identify and overcome financial challenges, preparing your future goals using the checklist that we'll provide within our presentation. And you know what, guess what? It's okay if you don't know how to do any of this. It looked like a majority of you have never done a cash flow before, and that's okay. That's why with Maricopa SBDC is here to help. As I said, we have 17 counselors in addition to including CJ and I. So our mission is to guide, educate, and support you. And we'll help you with these steps and provide feedback and assist in identifying those issues and help you spot trends to be aware of, as well as guiding you through an action plan to help you towards that positive cash flow, which is what we're looking for. We're going to move into section 2. This section is to how to complete a cash flow template to calculate your company's current and projected cash flow position. And again, please keep in mind there are many different cash flow templates out there. Today, we're just going to show you an example of a very basic one. Honestly, if you Google it, you're going to be able to see you know, a ton of different ones, but the one that we're showing you today is very basic. Each of your industries will dictate what type of revenue, sales versus service, the different line items called chart of accounts, or your cost of goods or cost of services. And on your operating expenses, it will vary from industry to industry as well. However, the consistent part is the math itself, which I know everyone is always hesitant to do.
I'm excited about that part.
Yes, we like the math part.
Love the math.
Yes, we like the math part. So we're going to do the math part. And of course, the first step in understanding that is to understand how to calculate it. You're going to need your financials to support this. And again, I know that some of you are probably wondering if we're going to have this presentation available, and it will be. They told us that it will be posted, and they'll share all of that. I believe towards the end, hopefully they'll let us know where that'll be. So you'll be able to see our presentation, and it will be accessible to you. So you'll need your financials to support this, your income statement, your income and expense statement, otherwise known as a profit and loss or P&L. So we're going to say that interchangeably. You're going to understand throughout this presentation, and we're going to keep saying that so you understand that it means the same thing. You're also going to need your balance sheet. Some of you may already know this, but we're going to take a quick look at the steps before we're moving on, okay? The calculation shows in the slide from operations, financing, and investing. You minus the cash outflows from operations, financing, and investing, equaling the net cash flow. Please keep in mind.
Like around in a circle right now. It'll start making sense. I promise.
It will start making sense. Yes. It's a word problem. And I used to panic when it was word problems. I would rather see like, you know, numbers, but we're going to fill in the numbers. If you do fill in the blank on a piece of paper that you're writing on, it'll make sense. I promise. Cash flow. Keep in mind, cash flow is the inflow and outflow of money from your business.
Mhm.
Okay, it's just that simple. Okay, it's necessary for daily operations, right? It's purchasing inventory, paying employees, operating costs. Positive cash flow, which we like positive, indicates the company liquid assets are increasing, right? Positive means we're going up. Negative indicates the lack of that. So lack of liquidity, it means we're not doing so hot. Okay, there are two accounting methods that we should probably mention. Your accountant probably tells you that we have an accrual accounting method, or we have a cash accounting method, which is cash basis. The difference between accrual and cash basis accounting lies between the timing. Okay, it was very confusing to me years ago when I started learning all of this. So believe me, I understand. CJ and I talk about this all the time, but it's all about the timing when the revenue expenses are recognized. Cash method is more immediate. So cash is just that, cash, right? It's the revenue of expenses, while the accrual method anticipates the revenue and expenses. Simply put, the cash basis is when cash exchanged hands. So when I give you cash, that's cash basis, okay? Accrual counts income when it's incurred, billed in one cycle and collected in another, if that makes any sense. I hope you guys are following us here. If not, again, you'll have access to these slides, or you can give us a call and we'll walk you through it again.
Sign up for the counseling.
Yes, yeah. We're going to take a moment to do another poll. This is a true or false question. It's a profit and loss statement is different than an income statement. We're going to see if you're listening. So Lisa's going to help us put the poll up. Thanks, Lisa. We're going to put it up for about 25 seconds, and then we're going to see what the results are. So a profit and loss statement is different from an income and expense statement.
I feel like I should put Jeopardy music on.
I know. I feel like, no. We're going to do that next time. We're going to keep everyone engaged. Thank you. What was our results, Lisa? Here we go. Let's see. 57% video work. Yeah, good. 50. They're listening. I love it. I love active participants. Business owners are smart. B is false. The answer is false. They are the same thing. So thank you. The names are used interchangeably. And like we said, we're going to continue to say that. You're going to hear profit and loss, and it's also abbreviated as P&L. So when you hear P&L and profit and loss, you're going to understand that it's the same as the income and expense statement.
We're going to acclimate you all to bankanese. That's the whole process here.
Yes. When people talk in bank lingo, it's kind of hard to understand. So thank you. So we mentioned cash flow is looking at the trends in each of the cash flow from operations, investment, and financing activities of your business. Now, the correlation of the earnings to your net income or earnings is the process of assessing and reviewing your net cash receipts minus your net cash expenses in order to optimize that cash position. So we need to make sure that your cash receipts and your cash expenses put you in a positive light. Okay, so we need to make sure that there's some sort of balance there. Cash flow is defined in tracking how much money is coming in and going out of your business. CJ is going to talk in a minute and discuss the tools that we need to calculate cash flow. But again, keep in mind that each financial document tells a different story. I know that when somebody says, do you know your financials? A lot of business owners panic and do that. But just keep in mind that it tells a different story and the timing is different for each of those documents. The biggest takeaway is that, let's say like there's a balance sheet, that balance sheet needs to always balance. That's why it's called a balance sheet. So the balance sheet will always balance. And CJ is going to walk us through some of the tools and from a balance sheet on our next slide.
Awesome. All right. Well, here's a simplistic view of a balance sheet and how it is basically split in half. We have the assets on the left and we have the liabilities on the right. The cash line item, see where the yellow star is right here. That's going to play a key part when we look at the cash flow worksheet later in this presentation. And remember, the balance sheet is a snapshot of any given point of time. And it is also cumulative data from when you first started your business. And like Amber said, it has to balance. When you provide the balance sheet's historical information for an entire year, it's referred to as a pro forma balance sheet. If you're not in business yet and you're just giving your estimations, it is called a projection balance sheet. Assets in this section, some of the common line items could be your cash. It could be accounts receivable. That's who owes you money. Could be your inventory. Could also be prepaid items such as rent or insurance. Or perhaps maybe you have land or building, or even maybe some equipment or some vehicles. In the liabilities section here, that may include accounts payable. That's who you owe money to. Current liabilities, and those are payments that are made within a 12-month span. And then loans and other long-term liabilities. And that means payments that are due beyond the 12 months. And these relate back to some of the assets that we just mentioned earlier. Then here in the equity section, also known as the net worth, this is where you see the amount of capital that is left in the business. It comes in the form of capital paid in, and this is the money that you and your partners, if you have any, have paid into your company. It can consist of maybe some common stock or dividends, and those are typically in corporations. And then the equity is also known as retained earnings. This is the accumulation over the lifespan of the business. It represents how much money the owners are leaving in the company to keep it running. And if it's a negative number, that's bad. Another tool for your toolkit that we use with our clients and a document that lenders use in their loan packages is called the scheduled liabilities. You may also hear it referred to as a debt schedule. The data within here should be found inside your current liabilities and your long-term liabilities. It's just saying who you owe in debts and what the monthly payments, those type of things, that what interest rate you're paying on it. This is really a key part of a loan package for a lender. And when you meet with your SBDC advisor, we'll ask you about this information in order to better understand your financial condition, helping you to look at some options, maybe getting better terms, or if debt consolidation might be in your best interest of your business. It's important to consider various ways to free up that additional cash flow. Here's an example of a couple P&Ls from two different industries. The line items or chart of accounts between industries have some similarities. However, the differences will be based on what you want to track specifically. Perhaps the construction company wants to break down their revenue by each job type, whether it's maybe a residential job or a commercial job. If they do that, then perhaps they'll also want to match their cost of goods to that specific revenue source. The P&L on the right shows more common line items that are found within most businesses. Again, I'm just showing you these examples to familiarize yourself with the various tools that need to be in your toolkit. I'd like to take a moment to clarify some of the terminology so that we can all stay on the same page. And it sounds repetitious, but I think it's better hearing it again and again until you hear it enough that you're like, I got that. So a pro forma statement is data that's based off your business's historical financial information with hypothetical situations being projected. That's a pro forma statement. However, if you're a startup business, you would be creating a financial projection. Startups create these projections relying on market research numbers for their industry. An established business can have a pro forma P&L such as this one, or a pro forma balance sheet, as I showed you about 3 slides ago. And in a few moments, I'll be showing you a pro forma cash flow statement. You may still be asking yourself, what's the difference between pro forma profit and loss statement versus a pro forma cash flow statement? Well, the net income from the pro forma P&L statement provides information on profit earned rather than cash that's generated. So if you just use the operative words in there, profit and loss statement deals with profit, right? Cash flow statement is only going to deal with cash, and that's the reality of today's cash position for your business. For example, still speaking about a pro forma P&L, if a business sells a product to a customer, it recognizes the revenue and the product is transferred to that customer, even though the payment won't be received until maybe 30 or 60 days. So the P&L shows the transaction, but the cash is not really in your account. That's why we have a cash flow statement, because that's going to show us the cash, like the checkbook. This pro forma P&L shows an entire year. There are 3 sections that we have highlighted. We have gross income, we have the total expenses, and then we have the net profit. And remember, hint, 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 the net profit on a P&L isn't the same as the net cash balance on a cash flow statement. Now that we've looked at some of the tools in your toolkit, that's the balance sheet, the P&Ls, and then the liability schedule, or also known as the debt schedule. Let's take a look at the cash flow template. Remember, the process is like using your checkbook or your bank statement, cash in, cash out. The goal is to put more deposits in your account than you write checks. Just because you have money in the bank doesn't mean you should just go cut yourself a check and go buy that new boat. Unless it's in the summer on Lake Pleasant, then okay. All right, but no. Having reserves will be vital to keeping your head above water during unforeseen catastrophes such as this pandemic. And how much should you keep in reserves? Well, let's see. We're going to walk you through a scenario with a sample company called the Like New Carpet Cleaners. Here is an example of a pro forma, it's a completed pro forma cash flow statement. I'll be enlarging each of these sections. I apologize, it's small on your screen probably, but I'll blow up each section as we discuss it. Think of this as your checkbook or your bank statement. It is to show what cash is coming in, and it's important to build up that cash balance so that in the event of a negative financial event, such as this pandemic, you have reserves to hold you over for a few months. And I recommend at least 6 months of reserves, but as you saw this with COVID, it's been a year now. Let's look here at the cash received. This section of the cash flow statement is all about the revenue and the income. It reflects the operating income from the sales. Here in the expenditures, this section shows the various expenses that are incurred from operation activities or investment activities or financing activities like loans. And then here is the best part. This is the net cash flow with the cash balance revealing what this business cash position is. So down here, it's telling you exactly how much you got sitting out there. And that is what the whole point of this presentation is today, is to get you to the point of where you can pull up your reports, your things, and look at it at any given point in time and know exactly where you are at and be able to look back into it and see if there's any trending issues coming up. The net cash flow indicates the difference between revenues, the money coming in, and all the operations and financing, the expenses, the money going out each month. And keep in mind that profit does not equal cash flow. You can't just look at your profit and loss statement and get a clear picture of your cash flow. All right, this is our third, I think this is our final poll for today in between. Lisa, let's take a look at this. Is net profit the same as net cash flow? I'll give you about 25 seconds to mull that over while I take a sip of my water.
And we're going over a lot of information. Again, remember, if anybody has questions, if they could put it in the Q&A opposed to the chat, that would be great. Oh, wow, looky.
Yay! Yay, thank you. Yes, the answer is no, they are not the same thing.
We're high-fiving everyone.
Woo, high fives.
I'm high-fiving everyone.
Air high five. Good job, guys. All right, so accounting is an operational requirement for all businesses, okay? I say operational requirement, but in the same breath, I'm saying it is the best business practice, okay? It's important, you've gotta know your numbers. It does far more than just evaluate your sales, cash flows, revenues, and other financial dynamics of a business. It also plays a pivotal role in calculating and predicting your future growth. The ability to track your most important assets, liabilities, receivables, and payables allows you to make sound business decisions for the future based on the metrics of your past. Here's a basic cash flow template. This is the manual way of doing this within an Excel spreadsheet. And to complete the cash flow template, you would need 12 months of bank statements, the end of year balance sheet, and 12 months P&L and a debt schedule. However, there are many accounting systems you can choose from. Instead of doing it manually like this, you can choose QuickBooks, Quicken, Xero, Zoho. There's lots of them out there. If by chance you're considering using QuickBooks, our clients, our SBDC clients, they receive a discounts. Just let your SBDC advisor know that you're interested. The left column should contain the cash activity from operations, investing, and financing. The star cell in the beginning, if you recall, back on that balance sheet a few slides back, I had highlighted the star because we needed that number to put here because it's going to be the beginning of it. It's taken from the balance sheet and from the prior of the 12 months bank statement. So if your balance sheet is dated on December 31st, 2019, your bank statements would be January through December 2020 to create a cash flow that reflects how the year went. It's good to do so so that you can see any trends. However, being a proactive business owner, you should take your most current balance sheet from 2020 and then all your bank statements from that point going forward so that you can enter all of your cash income in the upper portion of this template. Then your operating cash expense activities, your investment expense activities, and your financing activities below that. This will provide you with your net cash flow and your cash balance. That is your cash position. Amber?
Thank you, CJ. I appreciate it. Now that we understand what cash flow is, what tools we need, and how to calculate it, we need to move on to section 3. We need to see how we compare to similar companies and troubleshoot cash flow opportunities to improve our cash position. Now, how do we measure up? We need to first ensure that our industry code is correct so that we're comparing apples to apples. There's tools to help you measure up when comparing to like industries to ensure that you have that competitive intelligence so you know where you're at. To check your industry code, we use a NAICS code, which is a Northern American Industry Classification Code, otherwise known as NAICS. If you hear a lender say NAICS or one of your counselors say your NAICS code, that's what it is. This website is listed here for you to jot down, or you can just search NAICS codes and it'll come up. And once you have the correct code, then we can dive into how we compare to other competitors. I will point out too, if you guys have experienced the PPP world, the Paycheck Protection Program, your NAICS code is important to have as well. So understanding your NAICS code and what it is important for your business all the way around, not just to see how you measure up. I mean, you're going to need it for lending, you're going to need it for the PPP, you're going to need it for all kinds of things. So looking up your NAICS code is kind of important. Once the code is correct, we can dive into the comparison. So make sure you take a look how your business measures up, okay? On this slide, we're showing 2 of our tools. We have a ton of tools. We like tools in our toolbox that show the comparison to industry in businesses in our industry category. Again, this is to make sure that we're comparing ourselves to other industries that are like us. The first image to the right, CJ has the cursor over, is a graph from IBIS World. We're using our carpet cleaning business as an example, and you guys can see it's pretty, it's very color coded. There are quite a few benchmarks that are highlighted and color coded, but the top 3 codes are wages, other costs, and purchases. These benchmarks are held as kind of a standard for that industry. So that's why we take a look at these 3, and we want to ask ourselves, where are we comparison to this industry? And honestly, where can we do better? Do this with the other benchmarks too. And if it applies to you, because some of it, may not apply to you, but those 3 top benchmarks are ones that you want to set as kind of like your goals and where you are. And if you see any areas of opportunity, it's important to know like what your return investment is. And if it's worth the cost, if you're spending all this money on it, is it worth the cost? Because maybe this other carpet cleaning business is doing a pretty good job not spending as much kind of thing. The next image to the right is SageWorks. It shows the data in a ratio format. If you're a numbers person and not a pretty picture person, this works pretty good. This allows us to see year over year, giving just a snapshot of how your performance has grown or decreased. You can see the numbers there. For example, we see how long it takes for accounts receivable to come in, how long we have to have inventory before it turns over. And if you don't see improvement on that year over year, we know those areas that we need to put in action, put some sort of action in place, right? So if we're not seeing improvement, then we need to figure out what we're doing wrong. And obviously, if you work with one of us as a business analyst, we help you access these tools that we show here and walk you through your own financials.
So here, I wanted to show you all a feature within LivePlan that is very useful and it is fun. It allows the user to see real-time cause and effect on cash flow as you adjust your accounts receivable. And if you're working on your accounts payable, these little sliders on the live plan, you can move back and forth and you'll see a direct impact on your chart up here. So it's really a fun feature that it has. And then also on the inventory, it talks about inventory turns, and that may or may not apply to your industry. So, but it is a pretty cool tool because each time you move these little lines, it impacts this chart up here, and you can see, well, if I increase the turns of my inventory, how's it going to improve my cash flow? So it's one of the cool toys, and I just wanted to throw it in there because I get to.
Yeah, it's a really cool tool to use because a lot of people are like, well, I don't know what to change, and so it gives you an opportunity to figure that out. So that's a great tool. Thank you, CJ. Here we're going to take a closer look at what CJ showed us in that pro forma cash flow. Now here's the screenshot that was on that same cash flow statement that she showed us a minute ago with the 12 rolling net cash flow and cash balance. We see our first 4 months highlighted in red to show that we're negative. So it's kind of like red light, green light, right? So the red is negative. We definitely want to stop and pay attention when you see something in red, right? We're spending more money than we're making in revenues. So we need to figure out the why. Now, here we go with the math again, but just so you understand, just to walk through the math real quick, the calculation shows us beginning at $24,446, okay? That's the first month. The second month having a deficit of $6,703. Now that leaves us with a total of $17,743. The cash reserves for the end of the second month, that's what that number is, at $17,000. Now, it isn't until the fifth month, you see we're negative. So she highlighted the yellow, 150, that's basically flat, right? That's honestly showing in the yellow, it's showing yield mode. We're barely breaking even here. We call that a break even. Now, finally, in our sixth month, we finally see some green. And then it's a positive cash flow of 3,652. And though our cash balance is down to 13,988, we're still looking at a positive cash flow improvement. And that's what we want to see. Remember, positive cash flow occurs when cash is coming into the business from sales, accounts receivable, that kind of thing. The more than the amount of cash leaving the business. So monthly expenses, salaries, that kind of thing. So we want to see that green. Now, where that negative cash flow, the outflow as cash is greater than the incoming cash flow. That's what's red. This generally spells out that we're in a little bit of trouble and we need to figure out why. But there's steps that you can take, of course, to remedy the situation and generate or collect more cash, maybe by maintaining or cutting expenses with that tool that CJ showed you a minute ago. And having that plan in place is important. So we see more green than we do red or yellow, right? A few things to keep in mind is that cash flow P&L, keep in mind with your P&L shows change in working capital when your inventory increases, right? It reduces your cash flow. So if you're increasing your inventory, you're not gonna have as much cash because you use your cash to pay for inventory. When accounts receivables increase, it reduces your cash flow because it's recorded, but you haven't got it paid yet. It's not in your hand. Accounts payable, accrued expenses, and unearned revenue it increases your cash flow. So when that money comes into your hand, your cash flow is increased. Obviously, the most important thing to remember about all of those indicators that I just listed is your goal is to have no red months, just barely breaking even in yellow. We need those green months. So the green months are what our goal is. Now, for the most part, we don't always think that there's a budge in our budget, and I totally get that. Especially being a new business owner, we don't think that there's any budge. But here's a few actions that we can take to see if there's any wiggle room, right? As we look at our income statement again, otherwise known as the P&L or balance sheet, P&L or profit and loss, as well as your balance sheet and industry standards tools that we shared, we're going to consider pricing. Where are you in comparison to your competitors? Certainly in the pandemic, you shouldn't price hike, right? But you at least need to take a look and see where you're at. To that benchmark. We're also keeping in mind your target audience and considering price points. And are you comfortable where you're at? The next is the cost of goods, otherwise known as COGS. These are variable costs. This includes costs directly related to the production of the goods or services. The variable costs such as direct labor, commissions, raw materials, utilities. Consider inventory management also. Do you have too much inventory? If so, what could be done to turn it? Is it being held for too long? Is it seasonal? Will it expire? Those are the things that we need to make sure when we're considering cost of goods. The other thing is fixed costs, taxes, leases, even salaries. There's usually not a lot of wiggle room, but if there's an expense that can be reduced, or renegotiating a lease or something like that, maybe having extra funds to hire somebody. So it could be a positive thing too. Now, our next action to consider is knowing your current and projected cash flow. We previously walked you through that, so you should know how to do that. And how long can we afford to make a profit? CJ recommended 6 months, which is what we typically recommend. But as you guys know, we've been in this pandemic for a year. And so it's important that we, have that cash reserves and know where we're at, so we know how much cash reserves we need. Does the net income and cash flow match? Remember that sending an invoice to a customer or service remember that sending an invoice to a customer for a product or service creates revenue. However, it creates cash when you actually collect it, get that cash in hand. Excuse me. We're going to take a look at debt structure. I'm sorry, I'm looking at the time, and I'm kind of going through this kind of fast, just for time's sake. I want to be mindful of your time. We're looking at debt structure. So the loans and lines of credit, is it short-term versus long-term? Such as credit cards and vehicle loans is short-term. Can they be renegotiated? Are you on track? Can you pay them off to get them off your books? What about your long-term? Are we in position to refinance maybe for better terms so you can free up some of your cash? Or are you in the market for a line of credit or lending? Keep in mind, you have to have the financials to support that if you're going to pay back that debt that you're requesting. And the lastly, but most importantly thing I want to make sure that you understand is we have to review a budget. It's important to have one. If you don't have one, you need to get a budget. It helps you stay on track financially. It holds you accountable to your goals that you probably already set on your business plan, and we need to stick with that. So setting a budget, there's something about writing that down on a budget that really holds you accountable, and it's much bigger impact than just talking about it. So you need to write it down, and everyone knows that saying, if you fail to plan, you're planning to fail, or, that goal without a plan is only a dream. Well, we want to help you set that goal. So as a business owner, it takes a lot of work, right? We're not familiar with the terms or actions, but it's okay. Again, the SBDC is here to help, to guide you through that financial review and help you with those solutions and gaps along the way. So far, we've discussed the tools that we need to calculate the cash flow. And here we show an action plan to help you develop the results. This is a checklist. It's a tool that we can give you access to. It's a working document. It should be treated. You should have access to it all the time. You should look at it monthly, weekly, all the time. So it's broken down by categories and ways to help you create cash flow. Ask yourself, where do you want to be in 6 months? What plan do I want to take? There's steps to the left that show how to carry out your initiatives. And again, you'll have we can give you access from a business analyst standpoint to help you create these lists and create a budget for these tasks if necessary.
This is one of the features that is off of Growth Wheel, which is one of our resources. So you see the importance of knowing your cash position. Earlier, I'd showed you some of the bells and whistles on LivePlan, but perhaps you prefer Excel. How about we crank it up a notch and provide you a more manual tool that can assist you with the what ifs. This worksheet looks a little busy and maybe a little bit intimidating, but the value it can bring to you in understanding your cash position is exceptional. How long you sustain your business it actually answers the question of how long you can sustain your business at its current cash flow rate. This worksheet allows you to test out those what ifs. We business funding analysts refer to it as the stress test. And no, it's not because it stresses us out. Well, sometimes it does, but that's okay. But because it allows us to place percentages of stress on the cash flow and the revenue. What if your sales dropped 5% in March because of something bizarre like the pandemic, or on the positive side, maybe you gained a new account in June, then it increased your sales by 8%. This worksheet will show you the impact. This section here, the cash flows consist of those operating expenses, investments, and all that. Again, you can input a percentage of stress into the fields and it will just adjust your numbers just as much as you want to. And so you can see that cause and effect as it happens. And then here on the outflows, this is just showing you more of what you've been spending, how you've been spending on loans, those type of entries. And again, these things will all adjust in time. And then down here in the bottom, it says recommended cash balance and retained earnings. After you do your calculations, it will give you a recommendation as to what you should, to keep running your business the way that it needs to be. And how do the advisors at the SBDC support you with their cash flow? Well, we help you review your financials and connect you with these resources to become your best financial leader of your business. And we'll provide you honest feedback. You don't need to be in an echo chamber. We'll help you identify issues and opportunities and help you see if there's any trends going on that you should be concerned about. And then we're going to help you develop an action plan that can help overcome obstacles and create a positive cash flow. It's just, we call it sustainability planning. So that the next time an unforeseen issue arises, and it will, you and your livelihood can weather that storm better. With a few clicks of a mouse, you can have an assigned advisor. Here you'll see that this is just like a pop-up screen of what it'll look like when you click on request counseling, and then you just start filling your information in, and all of this comes at no cost to you.
It's a lot of information that we went over, and then we know that there's so many things that you need help with, and maybe you don't know who to ask. Obviously, CJ and I are here to help. And again, we have a lot of other business analysts, but that's why we're here to help. I always say this, but one of my friends told me one time, the only conversation, the only bad conversation is the conversation we don't have. I'm getting tongue-tied. We want to make sure that Maricopa SBDC has that conversation with you. And I know that a lot of this is confusing. It's a lot of information, but we're working remotely. Please contact us to request for counseling at our website that's listed. It's actually on the following slide here.
Yep. There you go.
Now, I know that we're looking at time, and I'm not sure if we have time for any Q&A, but Robert, what do you?
Yes, we'll take some Q&A. Before we do that, I know some people may drop off, but the SBDCs are located throughout the state. So if you're outside of Maricopa County, you don't have to contact the Maricopa County SBDC. You can, and I know they'll talk with you, but there are SBDCs located throughout the state, and you can find that information at azsbdc.net. That's the network's website. Or you can contact CJ or Amber directly, or myself directly, and we will get you connected with the analyst in your area. So let's jump in. We got just a couple questions real quick. First one is, how can we get a hold of the financial info by NAICS code?
So that's actually on through IBIS World, or one of the tools that we use through the SBDC. IBIS World is just one of them. Again, SageWorks was another one. And honestly, those require a subscription or something, which we don't do. We actually do that through the SBDC. So if you request for counseling and become one of our clients, it is a free service. And if you want to do any sort of marketing comparison, then we can help give you access to those tools.
Yeah, the reports are really in depth. And then, but as far as finding out what your NAICS code is, you can go right directly to the NAICS website and start looking up and putting in some descriptions. And I will say, use less words than more, and just build on it, because it's sometimes hard to locate what your industry code is. If you're already in business and you filed taxes, it's actually on your taxes. It's in the upper left-hand corner. You'll see it. It has an industry code in there, but yeah.
Yeah, the code itself is on the NAICS website, but financials would be in the industry comparison.
Mhm.
Excellent. We are short on time. I'm going to read a question and I'll answer it real quick. It's from Chris. It says, what is the best way to understand my cost of sale per unit? That can get pretty deep, Chris. So I would encourage you to reach out to the SBDC, use and schedule a session with them. You can go through and utilize the tools that they have and the discussion with them to make sure you're accounting for all the costs in the sale of each unit and pricing and knowing that correctly. So, and that's something I encourage everyone to do as we look at this session. There's a lot of great information. And if you're confused, again, contact the SBDC. It's no cost counseling service. They're a great program. I work with them closely, and they are a part of the community colleges and the Small Business Administration. Great program. And they have a lot of tools that are there to help small businesses. So leverage the resources that they have for your business. With that, I want to thank Amber and CJ for your time. Great presentation, great information. And want to remind everybody about our sessions next week, Tuesday morning, 9 a.m. Until then, we hope you join us on Tuesday morning, but until then, have a great weekend, be safe, and enjoy the great weather, and we will see you on Tuesday. Thank you.
Thank you.